Hey guys, welcome back to my YouTube channel. This is Ritik Ramaiya Forex. So I'm back with a new video today. As I told you guys, I'll be discussing about Forex versus stocks today. So basically this is it. So a few recaps from my older video which dropped out yesterday. So I discussed about the basic terminologies, which were the pip, leverage and the lots. So pip is basically 0.001 of a currency pair, leverage is basically how much you're willing to risk, and lot size is how much you're willing to bet, and leverage is how much you're willing to trade. So basically this is it. So now I'll go on to what's Forex versus stocks. Do you hear me out? This is Forex versus stocks. The difference between Forex and stocks is I'll start by giving you a small definition first about what stocks are, because you already know what Forex is from my first video which dropped out last week. Stock is basically a share of a company. So basically, let's say you're having a Coca-Cola company. So let's say you purchase a stock of a Coca-Cola company. That means you are owning a certain percentage of the Coca-Cola company. Let's say you're buying Pepsi, as an example. Let's say you're buying one share of Pepsi. So basically you are owning that part of the company. Let's say 1% or 2%. You're owning that part of. You're a proprietor. You're a shareholder of that particular company. So if a Coca-Cola or Pepsi performs well, then you get your share. But if it performs low, then you get a loss. And Forex is basically you're buying a certain currency. So basically you are possessing pounds or British pounds or US dollars or let's say Swiss francs. So you're purchasing that particular currency, not a company. So there's a difference between you're basically, now the first definition comes in here right now. Forex is here, stocks is here. Forex is here, stocks is here. Forex is of a country's currency. Stocks is company's share. So there's a difference between country and a company. Both are C's, but there's a difference. Here you are purchasing the currency of a particular country. You are possessing the currency of a particular country. While stocks is you are possessing a share of a particular company. We come to the second difference now. The second difference between Forex and stocks is Forex is a 24/5 market. Stocks is a 8/5 market. Now you might be asking me why 5, why 8, why 24 and why 5? So I'll tell you why. Forex is 24 hours running, 5 days a week. Forex market does not open on the weekends. A weekend is a holiday in the Forex market as well as the stock market. But stock market runs just for 8 hours a day, while Forex market runs 24 hours a day. So you can trade at any time you want, at your convenience, at any pace you want. So it's very convenient on the side of the timing as well as the fee structure and stuff like that. I'll be explaining you there in the further videos. But yeah, so it's 24/5 while stocks is 8/5. The third difference comes here. The third difference is that in Forex you can trade high amount of currencies, in the sense that you can trade a much larger value due to the leverage which is provided by the broker. In my earlier video, if you check it out, I have mentioned about leverage, how leverage helps you. So Forex allows you to trade much larger amounts than what you have. So while on the other hand, there is stocks. Stocks doesn't allow you to trade much larger options, as there's a limitation in the leverage offered by the stock brokers. So this is the third example. Now I'll be taking you to the fourth example. The fourth example is that stock market is just a $5 million economy, while the Forex market is a $5 trillion economy. So you can see the difference between here. Which one is traded more, which one is traded less. This is the fourth advantage. Come to the fifth example. The fifth example is that Forex market has very little commissions for the broker, while stock market has very high commissions for the broker. So commissions are basically deductions from the profits. So in the stock market there's a certain percentage, while in the Forex market there's a fixed value of 0.01 to $0.05 depending on the broker. So this is the fifth advantage. The sixth advantage of the Forex versus the stock market is Forex market is highly volatile. That means that volatility means that how at what pace does the Forex market change. So a value of a currency is determined how, at what pace. So it's very fast moving, you see. So it's very easy to make your profits, while in the stock market it's very stable. So it takes your a high amount of time to make a particular change in a particular stock, because you don't expect a company to perform in 1 day or in 2 days. It takes months and years to perform in the stock market. The seventh difference is that stock markets are usually used for investing, while Forex market are used for trading. So my next video will drop out soon, explaining investing versus trading. Which one is better, which one is not, according to your age, according to your lifestyle, what needs, what requirements you need. The next video will be dropping out soon. Stay tuned guys, don't worry. So this is basically a Forex versus stock comparison. I hope you guys enjoyed it. And if there's any comments or reviews, you can drop it in the comment section below. And don't forget to subscribe and like my YouTube channel below with the red icon in the box. Thank you. This is Ritik Ramaiya Forex, editor Aqeel Mohammed. See you soon guys.